Minutes from the July 28-29 Federal Open Market Committee meeting are scheduled to be released by the Federal Reserve on Wednesday. These minutes are going to be extraordinary reading. Here is why. At the July meeting, 3 Federal Reserve members voted to raise rates immediately. The majority held. For the first time since 2016, there was a unified dissent in a single direction. This internal fight has been happening behind closed doors. Wednesday, it becomes public. What the minutes will reveal: the exact arguments made by the 3 members who wanted to hike, the counter-arguments from those who wanted to hold, the specific economic data points that each camp cited, the language used to describe the inflation risk and the employment risk, and critically, whether the hold camp's position was firm or reluctantly conceded. Oil is now at $91 with Iran escalating further. 30-year Treasury yields are at their highest since 2007. The Iran situation has dimmed hopes for a deal to end the war. Here's the important thing about Fed meeting minutes. They capture what the Fed was thinking when oil was at a different level and before the most recent Iran escalation. The minutes will show the internal debate from 3 weeks ago. The market will read them against the current reality of $91 oil and attack ADNOC vessels. If the minutes show the hike camp was nearly persuasive 3 weeks ago at lower oil prices, the market will immediately price in higher probability of a September hike, given that oil is now higher. The minutes from the past inform expectations about the future. What language to watch for specifically? Hawkish language, references to inflation remaining too persistent, insufficient progress toward the 2% target, the labor market remaining resilient enough to absorb tightening. This language supports rate hikes. Dovish language, references to labor market weakening, consumption softening, cumulative tightening already in the pipeline. This language resists rate hikes. The minutes move markets the moment they are released on Wednesday afternoon. For WealthSprint viewers, the most practical response is to ensure your short-term savings are in high-yield accounts, capturing current elevated rates before any policy shift changes the landscape.